Raising money should be the easier part of building the company. And if it's really hard, it's because you're doing something wrong or you're horrible at selling the story. Good companies always raise money. Doesn't matter how bad the market is, there's always capital to deploy, and good founders are always going to raise money. And so if you're positioning yourself in the right way, it should be fairly straightforward.
Welcome to SaaS That App, building B2B Web Applications, the podcast where we share real-world stories, practical advice, and tech insights for those building or thinking about starting a tech-enabled business. I'm your co-host, Aaron Marchbanks.
And I'm Justin Edwards. Each week we bring you the stories, strategies, and insights you need to build your SaaS or tech-enabled business smarter, not harder. Let's dive right in.
Hello and welcome back to SaaS That App. Today, we are happy to welcome to the show Brett Calhoun. Brett is an innovator in the world of venture capital, tech, and SaaS, and is a champion for the startup ecosystem in the heartland. As co-founder and general partner of Redbud VC, he's been at the forefront of investing in early-stage tech companies across the U.S., but also in the heartland. He is also the co-founder of Stealth, which is a game changer in HOA technology, has contributed to multiple successful ventures in Fintech and SaaS, including CapGains Inc. and The Junction. And his passion for empowering entrepreneurs in underserved regions and his hands-on approach to venture capital make him a unique voice in the tech world. So, Brett, welcome to the pod.
Thanks for having me, guys. Really looking forward to the conversation.
Absolutely. And with me, as always, my co-pilot and world traveler who will be heading to somewhere in Central America next week, I think, Justin Edwards.
South America, technically.
South America. Okay, where to?
Headed to Quito. So Ecuador is a lovely country. Quito is a beautiful city. Highly recommend it to everyone.
Fantastic. Be looking for the pics and the news from there. All right. So, Brett, you've worn a lot of hats. Venture partner, co-founder of multiple tech startups. So just kind of right out of the chute and looking back, what was the driving force behind your transition between those two, founder to venture capitalist, and back and forth a time or two now?
Yeah, the driving force was that I really enjoyed the investing side and supporting lots of entrepreneurs and maybe more stability around you have multiple companies doing well and multiple companies doing bad versus just one company doing really bad and then really good. So maybe just more for my mental capacity, and also my first entry point into this was actually working with a fund while I was in grad school at Mizzou. And so got to support entrepreneurs in Missouri and then had a chance to work with a portfolio company there. A great team to learn and work with is called Patient, and they've been really successful now. And then I helped a friend start an angel investing group, and that led to me getting a role with a fund called the Legal Tech Fund, and we incubated a company there called CapGains and had the opportunity to be the first person on that team, and then ended up co-founding a lending startup, which was a good experience. Definitely learned a ton about the lending industry and capital markets and early days of building a company and what can go right, what can go wrong. And the opportunity came up to join some really successful entrepreneurs and building an incubator here. And so I stepped into that role, and through that kind of hustle and trying to figure out what we were doing led to raising a venture fund and rebrand everything into Redbud VC. And so we've been building this over the last 2-ish years.
Can you tell us a little bit about your policy or what kinds of companies are good fit for you, the things you look for when you make an investment? What is the strategy? What is your overall approach?
Yeah, so we're really in the talent sourcing business, to be honest. And 65% of our investments in this fund, of 30 companies we've invested in, we're the first fund in these companies or the first committed fund to these companies. We're looking to find people really early at the inflection point or even tracking them through the inflection point of they've taken minimal resources in terms of capital or bootstrapped nights and weekends. Maybe you left your full-time job, depends on your life financial situation, but have shown resiliency in that first 6 to 12 months of building the company where you aren't begging investors for money or trying to raise capital in order to, have your own conviction in your idea, or for whatever reason you want to raise capital to start. We're looking for people who have resiliency and conviction in what they're doing, and they've built that conviction from rolling up their sleeves. And we're coming in at an entry point where they don't really need our money. They just want it to accelerate. And we can come in and add value and help them raise the rest of the round. And most of the people we're investing in, it's sure we can help support those companies, but we're investing in good entrepreneurs who, honestly, if we give them money and don't hear from them for 3 months, that's fine. That's a bit about what we're looking for in terms of the people side.
So being pretty involved in shaping a lot of that ecosystem, like in Missouri, in the Midwest in general, how would you categorize or how do you think venture capital in the heartland differs from major coastal cities or anywhere along the coast or outside of the Midwest, especially when it comes to B2B web applications and some of the verticals that you mentioned? How do those things differ?
I think most people would agree that generally speaking, people don't correlate Missouri with venture capital. And that is a narrative that we're working on changing because there is a ton of talent here. There's a lot of great operators. And that is something special about Columbia is a lot of those people who've built successful companies stayed here and a lot of that knowledge was retained. So I don't really think like Missouri necessarily has a capital problem, or that's not a problem of like why there's not as much innovation. I think it's really unlocking that knowledge sharing and the network effects that people have here and creating denser ecosystems. And those are a lot of things. And that's partially why, I mean, we don't just invest in the heartland. We look for opportunities everywhere, and we want to create a competitive venture capital asset class in Missouri for a lot of the high net worth individuals or institutions who haven't been super exposed to that asset class because the returns are insane. If you do pre-seed investing right, you can't get those types of returns anywhere else unless it's you're putting your own blood, sweat, and tears into building your company.
You kind of answered really what my next question was going to be, which is once you funded these and they kind of get their legs underneath them, do you often see those organizations or those companies staying local, or do you see them moving out somewhere else to other tech hubs around the country? And you kind of indicated that those tend to stay in the Midwest, which is certainly a good thing for growing these ecosystems, like you mentioned. Would you say that's like the majority of them kind of stay where they are or stay regional?
I think so. I think a majority of them do. Some companies certainly leave and could be dependent on your industry. If you're trying to build a consumer company, like that seems like ultra hard to do in the middle of the country, especially when there's denser populations on the coast. And then obviously a lot of the innovation then makes its way to the Midwest. So I think it really is industry dependent. And then good founders and good entrepreneurs will always find a way to make it work and raise money. And investors on the coast, they're looking for good deals to back. Some of them, sure, maybe they care that the company's in the Midwest or they don't think it's going to be as successful because of that, but not everybody. I think good investors don't care where you're based. And a testament to that is like the guys that started Zapier or like Equipment Share or whatever, Patience, a good example. Columbia's probably considered like a tier 2 city. It's 130,000 people. So typical to college town. And if you can build a company here like that, then I mean, I don't see why you can't do that pretty much anywhere.
Sure. Yeah. I'm liking where you're going with the notion of these ecosystems. And I'm assuming that you have partners in this space, certainly University of Missouri, it's right there in the backyard, other universities and colleges that are in Columbia, because there are a number there, obviously. And then throughout the state, there's also the SE Student Venture Fund that's kind of playing into growing this next generation of web developers. What other types of partnerships do you employ or do you see working with going forward?
Yeah, I mean, ACE is a great example. I'm lucky to still be here in Columbia, and I can be the adjunct for that student-run fund, which is getting a lot of really high-caliber students educated on what venture capital is from a younger age. And we pull in students from all different departments, not just business students. So you get some unique perspectives, and it's helpful for me to see what the younger generations, how they're thinking about things and what's interesting to them. Other partners are in Missouri, there's a outsized amount of generational companies or large legacy businesses and a very undersized amount of venture capital companies. And so how we've unlocked partnerships are through corporations that are interested in being customers of innovative companies. And so like we can leverage the great talent we're sourcing all across the country and pair them with customers here, because a lot of those customers aren't seeing a ton of innovation. And like a lot of those companies in New York and SF and Miami or whatever take a while to start selling into the middle of the country. So we help diversify that customer pipeline, which is a selling point for us of like, somebody asked, like, why would somebody take your money out of Columbia, Missouri? Like, how do you compete with other venture funds? And it's like, well, we bring a different perspective. Being a Midwest investor, we have different values. We bring a different network that we can help diversify your customer pipeline. And then we have phenomenal operators on the team. And these are all reasons why funds or founders want to work with us. So that's an example. And then things like Missouri Startup Weekend have been great, which is where that's like our build event. So we try to source talent all across the state and surrounding states, pair up entrepreneurs with engineers to launch companies. And so like this last year, we had 50 engineers at the event, and that the quality of the companies we had this year, and then the amount of things that you can build in a weekend with all the latest advancements with AI tools is quite incredible. I mean, we had 11 companies this year that, first off, every single one of them could have won Startup Weekend the year prior. It's almost like we even joked about doing like an index fund because there's such good companies. Like there's good talent.
Yeah.
Ideas are cheap and people have strong work ethics in the middle of the country. And it's really just trying to help accelerate the education and knowledge around the steps to take from 0 to 1.
Yeah, having been a part of some of those startup weekends, even in some of the earlier days, and products of that for listeners are things like Zapier and Equipment Share. And Brad, I know that you guys have kind of rebranded that now at a bigger picture, so Missouri Startup Weekend. So tell me a little bit more about that startup weekend process, and then what are some of the big winners, quote unquote winners, that have come out of that just in the most recent years?
Yeah, you mentioned it too. In the earlier years, Zapier and Equipment Share, which are both incredible companies, multi-billion dollars now. So we took it over in 2021, but we did the startup weekend in 2022. And that was a company called Appreciate. It was a Mizzou student. He actually ended up dropping out of Mizzou to start the company. And we supported him in the early days, funded a little bit, helped him find a technical co-founder. And that company's still growing and scaling, and they're a profitable company now. It's doing quite well. And then the next year we ran this company called Liquid that came out, local entrepreneur, Crystal, who had sold some hair salons, and then she had an idea for building an operating stack for hair salon owners who typically aren't great business operators. They learn how to do hair. And so like there's some gaps into how to continue growing your salon and then eventually maybe even exiting it. And so that company's still going. We supported her early on. She got into Techstars and it's now a revenue generating business. And then the third year we did it, there was the second place winner actually started their company, and it was like the WeWork for music studios. And then that person actually, Kylie, she interned for me for about 18 months and she's great. She's about to open up her second studio now.
Oh, fantastic. That's great.
And then this year was a company called Focus, and it was two attorneys that I had met, and they had a phenomenal idea that a lot of people in their industry were begging them to build. And so before the weekend, helped pair them with a potential technical co-founder, which they're now a team. And that company I'm very excited about. We put an investment in them. And so, yeah, Startup Week has been great.
So you spoke a little bit earlier about it's about the people or about the talent, the folks you're putting on your team, and you make a lot of decisions about who to work with and what to fund. It sounds like based off of who the people are. So what are the kinds of things that you look for with a founder or someone you're looking to work with or fund? Are there characteristics? Is it just track record? It sounds like you listed a lot of people with different levels of experience coming out of the startup weekend.
Yeah, pedigree is a pretty easy data point. I think a lot of the folks that we're supporting, we certainly have pedigree in the portfolio, but a lot of people haven't quite had that pedigree. Maybe they didn't go to an Ivy League school or didn't work in big tech or haven't exited a company yet. So it's a little bit harder to underwrite that background. And so, like I had mentioned before, we're looking for resilience early on in building the company. And then this isn't every company that we're in, but something that is important to us is somebody who has domain experience and has lived the problem they're trying to solve. And because of that, they've probably developed some unique insight or wedge into the market that unlocks a much bigger opportunity. And so that would be a trend in our portfolio, is somebody with that background. And oftentimes, for example, construction, if you spent 1 or 2 decades in that industry, you probably have no idea how to raise venture money or have never navigated the whole game of trying to create FOMO and whatever it is that you have to do to raise funding, or hiring your first engineer and managing your first product and how to do customer discovery. So there is a slight opportunity to provide some support there, but through trial and error, a lot of times you'll see the ones who are resilient, it doesn't really matter. They'll break down brick walls and figure out how to build those companies. And then having technical skills on the team is obviously important. We're not looking for someone who is necessarily hiring somebody else to build the product that they're building, that they're supposed to be staying up late at night and or waking up early in the morning, that they can't sleep to think about, that they're paranoid and obsessed with. And so we make sure that they have the right skill sets on the team, technical skills, being able to articulate super well with hiring talent, selling to customers, or fundraising. So that's a little bit of it. Like I said, we're playing the power law. We're not investing in people who aren't doing this unless they're trying to create generational wealth.
And you've had to do some of this yourself with like cap gains and stealth and things like that. Was it a situation where you learned from those things and it has made you better at your work at VC, or was it the other way around?
I certainly think it has made understanding what it takes and being able to have empathy for how hard some of those things are in the early days of not having any money, high stress, could create you butting heads with a founder. Like there's like so many things at play that you have to understand when working with a team, and then understanding where, somebody's background. I grew up in a small town of 10,000 people, and I had zero education on what venture was and where to go to college and all those things. And I think a lot of the founders we end up backing, they didn't go to flashy schools. A lot of them are immigrant founders or Midwest implants into the coasts. They're people with very similar backgrounds, but have always had a North Star of doing something big. I mean, I think it's constant perspective changes and our pattern recognition changes and what we look for and how we're learning from. The only downside of venture is it takes 3 to 5 years to actually learn from something. So,
Sure, yeah.
but certainly, and it's been great too to just learn from osmosis with working over the last 4 or 5 years with the founders of Equipment Share. And their background's pretty crazy too. They didn't go to high school or college and built a multi-billion-dollar company and have hired probably 10,000 or more people at this point. And so they have a very unique perspective on talent as well. And so I think for us as like a fund manager, we have the ability and the perspective to underwrite talent that might be a lot harder for other investors to underwrite. We're very focused on pedigree and people coming out of Stanford and Harvard and whatnot. And we invest in those people. I'm not saying that's bad, but I think there's opportunity to get in early in opportunities that we can underwrite better than what might take somebody else a little bit longer to underwrite. Because on the coast, trend is look for pedigree. In the Midwest, it's look for traction. Well, what happens when you don't have pedigree or traction? That's where we come in, and a lot of our opportunities look like that. So,
And that's kind of aside, pivoting a little bit to the actual business idea or the opportunity. What kind of filters do you have for selecting something that you'd be interested in? Obviously, if you're looking for $1 billion, then total addressable market is going to be a thing that you look at. Are there other things in that vein?
yeah, I mean, market size is important. I think it's not everything. If you look at like a Carta, if you're familiar with Carta, the cap table management company, it's like early on, if somebody was raising and they're like, we're going to digitize cap tables and make them easy. It's like, well, how is that like a big company? Well, look at Carta, they're a multi-billion-dollar company. So like part of it's the market size, but also being able to have an open mind about the founder's vision and like where the market could be going and what this could unlock. So we certainly do spend a lot of time there. And then we spend a lot of time talking to their potential customers that we know and people from the industry. Honestly, like that is where 90% of our diligence is spent outside of just spending time with the people and trying to understand if they're the right founders that we want to back. Because most of the companies that we work with, this is all very qualitative. There is no revenue numbers. We've done some that are post-revenue, but I mean, it's so early that it doesn't really matter. It's immaterial. So that's what we mainly spend our time with.
I like that you're looking more toward or what is becoming a part of your portfolio now. You kind of mentioned these trends and you're kind of following these. They seem to be in kind of non-traditional sectors. You'd mentioned the salon product. Certainly Equipment Share back in its time was a very non-traditional sector of a place to put software as a solution. What other kinds of non-traditional sectors have popped up? And do you see even more continued growth opportunity there in that space?
With all the generative AI stuff and the advancements with AI, there's a lot more ability to unlock opportunities in some of these like sleepy, low innovative spaces. So think like pharmacy, for example. You have to have a very high level of accuracy in order to build a product that pharmacists can use. And up until now, there hasn't been a ton of innovation in that space. And we recently just backed the company there, and they were able to move quick and build a product that had very high accuracy. And a lot of the big conglomerates that work with pharmacists, just they couldn't do it internally. They didn't know how to do it. They couldn't build it. They couldn't get accuracy past like 60%. Another good example would be, for example, like title insurance. So document intelligence within that space, like you literally could not do that before like the last like 6 months. You have over 3,000 counties with hundreds of years of history with all these pictures and horrible digitized formats that's been scanned into the internet. Whereas now you don't have to OCR all the stuff and hire an army of people in India to go label everything. It's like there's like VLM now where you can convert the PDFs to images and use computer vision to read the documents and then to communicate with the documents. That is a lot of the stuff that we're looking for. It's like you couldn't have built this 2 years ago. And then there's a whole data play that you're unlocking that no one's ever had before. So that's where like the vertical stuff comes in, because like moats are pretty cheap now because of AI. The better distribution and access to data to keep doubling down on your product and make it really hard for somebody else to enter. We look for people in those spaces.
So aside from these emerging trends, this is obviously a shift that's happening in the industry because of AI. I mean, it's the new shiny toy, right? Everybody is talking about it. Everybody wants to have a piece of it. Not everybody understands it or how it can be leveraged in their business or in their organization, let alone how to utilize it well enough to actually have it make a difference in what it is that they're doing. But As we see these emerging trends, what would you say that, beyond just like immediate high growth and quick turnaround on an idea, what are investors looking for just kind of beyond current emerging trends?
Yeah, I mean, actually, our best performing companies right now, they have nothing to do with AI. We love fintech companies.
I'm not surprised at that.
Yeah, I mean, we love fintech. Like, it's the opportunity to sell a commodity or do lending or whatever, but have access to a very unique distribution channel. Anything with that is very interesting, where you can build a brand. So, for example, like the closing cost company that I was a part of, we were financing closing costs on VA mortgages. And so having a partner with like a Veterans United Home Loans that has a core to the market, where they're sending us opportunities, that we have a banking partner on the back end, and there's zero marketing, zero acquisition costs for the consumer. So like, we love fintech opportunities like that. So we have a company in the auto warranty space that is very B2B focused. So they sell to partners who resell their warranty product. Like, they've had zero customer acquisition to date and have had really solid growth this year. Or like working capital financing, like landing a partner like a Home Depot or a Lowe's, and where they distribute your product, but you're adding value to them, so they want to distribute it, but you're actually getting paid for somebody else to distribute a commodity for you. Like, we love those kinds of businesses, and there's still opportunities for that. The multiples aren't going to be like as crazy high as like an AI company, but I think there's still so much value creation still in many industries like that. And so we look for those things. We do some deep tech stuff. Like, we did one that is CRISPR gene editing with mosquitoes, which is really interesting. So for example, like Miami-Dade County spends almost $40 million a year alone on mosquito prevention, and how the problem with disease carrying mosquitoes has gotten worse, and how chemicals are so bad for the environment and they kill other species. We're like, a team of professors developed a technology that basically replaces all that in a much cheaper way and tapers the population of the mosquitoes more efficiently. It's like, that's an interesting opportunity for us. We're not scientists, but like, we had somebody help validate the technology, but like, it literally just makes sense. It's like, this is a no-brainer. Like, why would you not buy this? And we've gotten some other opportunities through like our relationship with Equipment Share. And if they're interested in being a customer of a company and it's really early stage, like, we're going to invest in that company. Like, they're doing something right. So those are some of the things that we look for.
So for folks who are listening who are either technical co-founders, maybe kicking around an idea, maybe starting a product, what kind of words of wisdom or advice can you give them if they're approaching, maybe looking to get some funding?
Yeah, I mean, just be able to show that you have conviction in what you're building and that you have a unique insight into a specific industry. You're thinking about the world differently than every other person trying to build whatever it is you're building, because somebody's probably had the idea before you. And then I think it's making sure that you're not out just begging for money. You're always like raising, you know what I mean? You're always networking. And then when the opportunities come up, then it just kind of naturally happens. You don't want to be like, all right, on June 15th, I'm going to start fundraising. Yeah, you just really start networking, and then you start updating investors over time and showing those results. And then someone's going to be like, will you take our money now? And sure. So that'd be my recommendation there. Yeah, raising money should be the easier part of building the company. And if it's really hard, it's because you're doing something wrong or you're horrible at selling the story.
That's a good way of putting it.
Yeah, good companies always raise money. Like, doesn't matter how bad the market is, there's always capital to deploy, and good founders are always going to raise money. And so if you're positioning yourself in the right way, it should be fairly straightforward.
Are there instances that you can recall where you've pushed back on a company that's come to you for funding? There's a couple of markers that we're looking for you haven't hit yet, or this idea needs some work, take it back and tinker with it for 6 months to a year. What do you say to those folks who just aren't ready yet?
For sure. I just had one I talked to this week, and I said, let's put a time on the calendar for 4 weeks later. I want to see where it's going. They had no idea what the long-term vision was. They built an interesting tool. They had some users, a couple people paying them a little bit of money, but they didn't know what the business was in 5 years. And I'm like, well, you have to have conviction and like something. You're just aimlessly floating around. When you have a milestone of like, this is what we're like going for. And I don't know how I'm supposed to have conviction in a company when you don't have conviction in your long-term vision. So like, that's an example. Or like founders coming to me that are pre-revenue trying to raise $5 million on like some absurd valuation. It's like, why? Like, why make it hard for somebody to invest in your company? If you want to raise money and you want to build the company, like, why would you go out and try to make something so expensive where it's like, how do I even make money? I like where I'm questioning out the gate. And so I would never bring up valuations if I was a founder. I mean, I would say like, this is what we need to raise in order to fulfill these goals that we have for the company. And then the investor can kind of back into like, all right, well, typical rounds are you're selling 10 to 25% of the company. So the valuation is going to be somewhere around here if we raise this much money. And I think that's a big mistake that founders make because they're like, we're raising out a 15 million valuation. And then you get on the phone with the investor and you tell them that, and they're like, well, that's too much for us. So we just don't want to talk to you anymore. That is just a horrible mistake to make.
When you're going to fund something, you're looking to know how your capital is getting deployed. Like the person who is doing the raise, the founder needs to have a plan for like, we need this much money because we have these goals and we want to deploy this money exactly this way to achieve this end. That's something that you're looking for them to come to you with?
Yeah, I mean, for sure. I mean, it's, you have an idea, you have some plan around it. I don't think we're not going to go dig into somebody's financial model, but like, I do think that you should build something out. Like you should be budgeting, like these are the expenses that I have. And it's pretty straightforward. It's like, I need to hire these 4 people. We have AWS costs. Like, you know what I mean? Like, you need to know what it's going to cost you in order to hit that revenue milestone that you want to get to, and then probably have a little bit of extra funding just in case, you know, something doesn't go right.
Yeah, that makes perfect sense. Like, would you consider funding a project where someone's entering into a space that's already crowded, but they maybe have a unique perspective or a particular niche in that? So I'm thinking, we talked to a guy recently who he's basically competing with Salesforce, kind of. This is a long time ago, and his product worked on dial-up, which Salesforce didn't at the time. So he went after a different kind of smaller segment of the market. Are those things that you're open to?
For sure. Yeah, 100%. I mean, we've probably got a few companies in those markets already. So.
Mm-hmm. Is there an additional hurdle that a founder entering a crowded space has to clear for you to be interested, or is it just a bit of skepticism you have to kind of talk through as to why, especially if it looks very similar to something else?
If they can clearly articulate why their company should exist in a crowded market space, then yeah. If they can't, then I don't know why we would be investing in the company.
Yeah, well said. That makes sense.
That's about as succinct as you can put it. Well, Brett, this has been really informative. Thank you so much for sharing your time and your talents with us. We have been talking with Brett Calhoun, co-founder and general partner of Redbud VC. Brett, where and how are the best ways for people to reach you?
You can email me at b@rb.vc or connect with me on LinkedIn or on X. I'm around. Do my best to respond.
Awesome. Thanks so much for being here, Brett. Really appreciate it.
Thanks for having me, guys. This is fun.
Special thanks as always to our listeners. If you like what you're hearing, have ideas for the show, or just want to tell us what's on your mind, throw a review our way. Hit subscribe if you are so inclined, and we will see you all next time on SaaS That App. Thanks for cruising along with us on SaaS That App. We hope you grabbed some insights that were inspiring, actionable, or at least entertaining.
If you enjoyed the show, don't forget to subscribe and leave a review.
Until next time, keep building, keep growing, and keep those apps sassy.